Hello, everyone, and thank you for taking the time to review the Morgan Hill, California real estate market analysis for September 2008. My name is Robert Whitelaw, and I'm a licensed real estate broker in the state of California. I'm also a member of the National Association of Realtors and a certified E-Pro, and I'm also the president and CEO of Whitelaw & Sons Real Estate Services, serving all of Silicon Valley. I want to start off by thanking everyone who's been poking me with a stick over the last week or so, complaining that I hadn't posted this yet. I apologize for the delay. I ran into some technological challenges. Trying to be a good little user of technology, I was upgrading things, and in the process of upgrading things, screwed up a lot more than I fixed. So that delayed me a little bit, but here we are. Let's go ahead and jump in and take a look at the supply and demand numbers. We'll start off with the inventory, and relatively speaking, some pretty good news, actually. Our inventory numbers are obviously still up from last year. We've been in this down market a little bit longer than the county in general. In fact, we were one of the first areas to really start getting hurt by it. But we're also in a position where things are actually starting to look pretty good. Some of the same trends that we saw countywide. If you look at the trends, obviously we've been seeing an increase since 2004. We saw a really big increase between 2005 and 2006 on these inventory numbers, and then things kind of stabilized. We've seen a big jump, and a lot of that has to do with just the sheer number of foreclosures we've seen this year. But to get down to the nitty-gritty numbers, inventory is up 14.4% from the same time last year. So from September of 2007 to September of 2008, we've had an increase of 14.4% in our inventory. That's a net increase of 40 more homes on the market right now than were on the market last year at the same time. That gives us a total homes on the market in Morgan Hill of 317. Now, as far as new listings are concerned, actually some pretty good news here. We peaked out in 2006, and we've seen relatively flat performance in the number of homes that have been going on the market. In fact, actually between 2007 and 2008, we actually saw a decline, which is exceptionally good news. Once you hear the actual numbers, though, it's not that much to get excited about. The new listings are down 1.3%, and while that sounds good, it really only means that we have one fewer home being added to the market in September of 2008 than we did in 2007. So I'm not going to call that. It's better news than it going up, so we'll call it good news, but definitely very mild good news. Now, that was a total number of homes listed of 78 for the month, so that's actually pretty good. I'd love to see this number go down more just to help contribute to a reduction in inventory. We actually should see, if we fall in with previous cycles, we should see this number go down as we head into winter. But let me point out right here, as I did in the overall market analysis for Santa Clara County, all bets are off, really, for next month, because the numbers you're seeing here are totally unaffected by the stock market crash, the bailout, all the craziness that's been going on for the last few weeks. None of that happened in time to affect the numbers for September. October is going to be the first month where we see those numbers affecting the marketplace. Now, I've been tracking it. I've been actually running the numbers every few days for Morgan Hill, and I haven't really seen a substantial impact. But anecdotally, I've been calling some title companies here in town, and they're seeing things sort of drying up a bit. So we'll see how the numbers pan out. But because we're having such a complete economic shift just in the month of October, it's going to be really hard to predict what happens in the coming months. But let's go ahead and take a look at where we are, where we've been, and see if we can get any kind of intelligent information out of that. Now, let's go ahead and look at the solds numbers, because this is actually some good news. We have seen an extension of the summer season. Now, this is the first year in a couple of years we really got a summer season. Last year, we got a really dinky summer season, if you'll recall. It started early and it ended early, which was very disappointing, and we'll see that in the numbers as we move forward. Year before that, also disappointing in terms of just really everything, volume, the works. Sales this year are actually doing fairly well, up 72.2%. That's 13 more homes sold in the month of September in 2008 than in the same month last year, so that's good news. The total number of homes sold, 31. That's 13 more homes sold this year than last year. Now, here's where we get into the sort of the analysis part. Well, one of the big things that I put some stock in as far as tracking how we're doing is the relationship between the total inventory and the total number of homes sold. Now, countywide, that number was at about 6.4, and that basically means that if our inventory and sales numbers froze as they are right now, it would take about 6.4 months for the entire stock of Santa Clara County to get sold off. If we're just looking at our local market right here in Morgan Hill, if the numbers froze, it would be about 10.22 months. Now, that's more, obviously, than the county, but it's also better performance than we saw for Morgan Hill last month. Last month, that number was 10.73. So the lower that number gets, the better. I think once we get to the point where we're at 3, 4, 5, right in that range, we're now in a place where I think the market is at least in some sort of a balance between buyer and sellers, and things are better off. The thing that's really out of balance right now is our inventory, and obviously foreclosures are going to artificially keep that really high. Now, just to sort of calibrate you to what influence the foreclosures are playing here, as far as the homes that were sold, now this is just the sold homes, not the total inventory, we had 6 homes that of the 31 that sold in September that were either short sales or REOs, or foreclosure properties, and that's 19% of the total number of homes on the market. So that's not horrible. There are some areas where that number is a lot higher, and that's not such a great thing, but it is what it is, really. There's not really anything we can do about it. And once those sort of work through, things are going to start to move back into its sort of a normal range, I think, for the marketplace. Now let's go ahead and look at these same numbers, just going back over recent months, back to June of 2007. Now, first, we'll look at the inventory numbers. Actually, generally good news here, which is the same for the county. We've had declining inventory numbers really since April, which is great. I mean, it goes against what we saw about last year. We saw a dip actually last year, but countywide, it's the opposite of what we saw. We actually saw inventories kind of going up. We saw a decline in inventory numbers between June and September of last year. We're seeing that same trend here. We saw a boost in October of last year. We'll see if that happens again this year. But right now, things are going on that definitely indicate a strong shift in what we're going to see in the coming months in the market. So I'm hesitant to really use past numbers to project where we're going, unless there's just some sort of a really strong something that would tend to nudge the numbers one way or another. Now, inventory is actually down 1.6%. That's good news from last month. That's from between August and September of 2008. Inventory dropped 1.6%. That's a drop of 5 homes, so 5 fewer homes on the market now than last month. If we take a look at the homes that listed, a little bit of an increase from the same time last month. We listed 3 more homes in the month of September. We had the same basic thing happen last year, which is always kind of interesting to me that when folks list in this time of the year, because in a normal market, which we haven't had now for a couple of years, so you can't even really see it on this graph, but in a quote-unquote normal market where the inventory numbers and the sales numbers are more balanced, you'll tend to see the number of homes being listed dropping from September on, and then we're not seeing it. We're seeing folks last year, for instance, really strongly listing homes right up until October, and then not a real strong drop until we got into November and December, and then of course the resurgence in January. Now, listings went up. New listings went up 4%. That's really just 3 more homes on the market put on the market this month than last month. Not a huge increase. If we look at the total number of homes sold, we can see we actually are very flat. In fact, there is no change. We sold 31 homes last month. We sold 31 homes this month. So that's actually pretty good news, particularly when you consider that this is normally the time when sales start to drop a little bit. Look to last year, August of 2007. We saw sales numbers substantially drop. We got June, July, and August. We had some pretty flat sales. And then we saw them drop substantially in September, stay about the same in October and November. Again, last year isn't a big indicator of a normal season. It was strange to have sales in those numbers. We saw really big sales drops in January and February, but we've seen a nice big jump in June, decent performance through what would normally be called the summer season. So it's all very encouraging that we've seen these increases. It'll be also very interesting to see if we see this continuing into October. If we do, it's the very first sign that this market may have hit the bottom, where we've got enough people coming out and saying, you know, these are the deals we want to take now. I think that's what's really bringing it out. There are so many homes that are just such great prices that I think a lot of folks are seeing them for the value that they are. However, in my experience, just in the last few weeks, This economy definitely threw some cold water on folks who were out looking to buy, and not in many cases because they just decided they didn't want to buy because they were concerned about a market. Now, while there were folks who were in that bag who just felt, I'm not sure this isn't the bottom. Is this just a pause before we see another big drop? Folks are asking themselves that question and taking themselves out of the market. They actually represented a much smaller piece of the experience for most buyers out there. Most of the buyers that I've been talking to now find themselves in a position where they just can't get a loan. Everybody's up in the air. Rules are changing daily. It is becoming a very difficult process for some folks. Folks that were pre-approved and ready to go now find themselves unable to get that financing going when they need it. So if you're someone in that position, you should be checking with your financial person daily to make sure that everything is still good with your pre-approved loan or potential loan that you might be getting. Okay, so now let's go ahead and take a look at home prices. Everyone wants to know what the home prices are. These are our numbers going back to 1999, just for the month of September. What's interesting is we've got our big drop in 2007 with a lot of stability, really, in average price. The average home price actually went up by 0.1%. The average home price in Morgan Hill was $757,613. That was a dollar change increase of $967. The median price was $644,400, and that was a decrease of 14.1%. And the median dollar change was down $105,340. Now let me explain what that basically means. If you think of that bar as the middle point for the total number of homes that were sold, so if 100 homes sold during the month of September, 50 of them sold for below that price and 50 of them sold above that price. So what this basically tells you is that the majority of the number of homes that sold were huddled far below the average sales price. So what that kind of points out, and the numbers actually back this up if you go and look at them house to house, is that there were a few very expensive homes that sold and then a whole lot of lower priced homes that sold. We're definitely still seeing activity at a variety of price ranges, which is interesting. But definitely this month was representative of selling off an awful lot of the lower priced homes. So let's see. Now moving on to just the most recent information relating to home prices. Let's go ahead and take a look at those, see what the more recent trends have been. Now we're seeing a lot of variability here. There's been a lot of up and down, a lot of fluctuation. It's always interesting to note when the median is way off from the average price, particularly last month, which was very strange. We saw more homes at the higher end selling than at the lower end. So that was kind of strange. And then this month it's the opposite by not quite as much. Is there anything we can really glean from this? Is there any good information that we can get out of this? I'm not seeing anything here. I'm not willing to buy into any of these trends as something we can project forward. I think what we're going to see, just because there's so much uncertainty in the market right now, for those folks who want to get their homes sold, and because it's so difficult for some folks to just get financing, we're sort of seeing an artificial depression in the number of folks who can buy. There are plenty of ready, willing, and able buyers, but there aren't enough ready, willing, and able lenders right now to make it happen for a lot of these folks. So what could that mean to us? I think that in the short term, it could mean that October's numbers for sales look down because a lot of these folks aren't able to get the deal going in October or aren't able to make these deals happen, so they're not going to end up closing. Now, that'll only affect the first part, because remember, it takes about 30 days for a home to get sold. So while October will be interesting, November will be interesting too, because all the folks who go into escrow in October will see their homes close escrow in November, and then November might just see that artificial dip that we're talking about. So the deals that close in October tend to be ones where folks got their financing approved in September. So there's usually a 30-day lag on those. Again, these next 2 months are going to be interesting to see. I didn't hear anything about folks jumping out of deals or deciding to quit on deals because of this particular economic crisis we found ourselves in October. But I think the overall numbers will tell us a little bit more when we look at them for next month. Now, let's go ahead and look at the specific numbers here. Now, the average home price decreased 1.2% by $9,130. The median price down by 19.5% from the previous month. That's a total of $155,600. $100 decrease in the median. And again, the total homes sold was 31 for the month. Now let's go ahead and look at how long it's taking these homes to get sold. Now, we've got a pretty big number now, yet another record-setting period. We have 131 days. And unlike other months where I could point to, a small number of homes that had been in the market just forever that were sort of artificially increasing this number, this is really a pretty accurate number this month. If we do the breakdown here, it's actually up 25 days from the same time last year. That's a percentage increase of 23.6%. Now, if we look at just the breakdown, sort of put it into brackets, the number of homes that sold in 1 to 7 days, well, 3 homes sold in that period of time. 3 homes sold in 8 to 30 days. 6 homes sold in 31 to 60 days. 2 homes sold in 61 to 90 days. 9 homes sold in 91 to 180 days. And the rest of the homes, all 8 of them, took 180 days or more to sell. So in looking at those numbers, this is actually a pretty accurate average. There's no single way out there house that was on the market far longer than any other that's really playing with the numbers. So that's a pretty realistic number. Again, it's the same dynamic that we've been dealing with for almost 2 years now. And that is, if you're the best home in your price range, you're going to get sold. That means that at your price range, you're offering a little bit more than everybody else is. The amenities are better. You're in better shape, maybe more upgrades, those types of things. And for instance, I sold a home in August. That home had been on the market for a while, but what sold it, basically it came down with my buyers to a discussion of what are the things that they can change and the things that they can't change. And the things they couldn't change were the things they cared the most about. And that home happened to have it. So a lot of it's a crapshoot. In this particular home's case, it was its orientation and the view and those types of things that couldn't be changed in the home. Unfortunately, sellers, there's nothing you can really do about those types of things, but you need to really maximize what your home does have to offer, which means you are constantly having conversations with your real estate agent, finding out how they're marketing it, find out what things they're pointing the spotlight on to emphasize. It's definitely a time when if sellers want to get attention, they have to be working doubly hard to do it. This isn't a time to be shy about the fact your home is for sale, because the market is not going to be what gets your home sold. It's going to be the efforts that you and your agent implement to make it happen. So let's go ahead and take a look at these same numbers going back to previous months. We're actually doing better than we were last month, although last month was kind of artificially high. We were having sort of a dumping of inventory. Now, again, these tending higher numbers can be a little bit deceptive, because what we're really doing is just selling off old inventory. Things have been sitting out there so long because there were so few buyers. Because we've got this increase in buyers out there going into the market and buying these homes up, we're just naturally sort of getting these homes sold that have been out there forever. So it's really good news. But again, as I said, it's not just a few homes; it's a whole lot of homes that are having this issue. So this is I still consider this a pretty accurate number. But again, it's going to come down to the efforts of you and your agent. Now, between August and September, we saw the days to sell decrease 19.6%. That's a net change of 32 days. Okay, now I appreciate you all taking the time to come and listen to what I have to say on these subjects. If you would like to visit my website, you can find my other YouTube videos on various markets. You can also listen to my weekly podcasts, and you can also read my articles on different things relating to real estate. If you'd like to get in touch with me directly, you can do that via email. Just send those messages to robert@soldbyrobert.com. Or if you'd like to call me directly, just dial 408-852-0525. If you prefer the online chat scene, you can find me at AOL Instant Messenger, Google Talk, and Yahoo Instant Messenger with the screen name The Rebel Broker. On Skype, just use Rebel Broker, and you'll find me that way. And of course, referrals are always appreciated. If you or anyone you know is interested in buying real estate in the Silicon Valley area, please get in touch with me. I'd be happy to give you any help I can. And finally, even if you're not in Santa Clara County, I can refer you to an excellent agent no matter where you're shopping. So if you're interested in finding an agent who's as interested in the markets and who works as hard as I do to make sure everything gets taken care of correctly, just give me a call and I'll be happy to refer you to them and get you guys connected. Thanks again. I look forward to talking to y'all next time.